Okay, let's talk the weekly close position for Bitcoin. What are the bulls looking to do and what are the bears looking to do? How is this fight likely to go and what do I think is going to happen later on today? As I get into the video, you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, why not check it out? Link is in the description down below. Just turn the lights on there. Right. Let's jump right down into the video. So, as you can kind of see here, guys, we are on the weekly time frame paired up with USDT, and we are looking at Binance as the data source here. Now, if I zoom in, you can kind of see that we have a previous area of demand that has gone and turned into supply. This is pretty common because people who are trapped in the positions here can now get out at cost neutral over here. Okay, now we can see that we've been testing this upper area. We actually consolidated in this range for a bit longer than I would have expected. So I'm thinking that we've probably chewed through a lot of those sell orders at this point, and we're likely to still push on up higher. We also know that the $35,000 CME gap is still in play. We want to consider that as potentially where we're heading, okay? But in terms of this particular weekly close, we can see we're not in the best, strongest positions. We are getting rejected here. And again, this is a similar area for the fourth week in a row. We're unable to push that much higher. We get the wicks up higher, but we can't get a close position up in that higher range, let alone getting out of this supply range above $31,848. So we're really struggling to kind of get a close position up there. Okay, just from a kind of support resistance demand supply zone kind of point of view, you can see that we did come down towards our $24,000 to $25,000. This was our target range when we first tapped into here a couple of weeks back, and then of course we've moved back up into this range. So, all looking kind of, as you would expect. Now, if we throw the Gaussian channel on here, you can see that we did close above on the 19th of June, and we kind of consolidated up here. The expectation is probably going to be to come back down and retest the upper area of the Gaussian channel there. And as I said many times before, the Gaussian channel has been great and historically predicting out these kind of bullish times and bearish times. However, I think ever since basically kind of 2019, it's kind of not been as accurate as we'd like it to be, and we saw some anomalies also up here back in 2021. So I'm hopeful that the Gaussian channel is going to be as accurate as always. However, I am I guess pessimistic when it comes to the fact that there is some underlying issues here that have changed, and therefore its predictability could have also changed with it. So it's an interesting one. I'm keeping an eye on it to see how it kind of goes. But for the most part here, you can see that we are trying to get rejected on that upper area. Apologies, guys. I'm rather not well today. So let's take a look at this, right? So as we kind of see this upper area, if we come on over into my macro version 2, without kind of the noise on there, we just break it down into its simple terms, we can see that there is going to be a move towards that 32,681. I think essentially that's really where the bulls are going to be targeting initially. This is a 50% level on this move to the downside here. Okay, so grabbing the fibs, pulling the fibs down, if I can actually snap it to the correct area, let's go ahead and do that. There we go. You can see that this 50% range is a range that we need to kind of consider as our first area of major resistance. And of course, the big one, the 61.8 at 38,984 is going to be pretty much a big resistance. If we cannot close above those levels, the bulls have really lost control at that point. So if we want to be bullish on the market, and we want to think that we're in a new bull market, then of course we're targeting out 50%, which is 32,681, and then the 61.8% area at 38,984. Right, those are two key areas that we need to see. Once we cross a weekly close position up at the 61.8, I think we're going to be in a really strong position at that point. But of course, I think a lot of people are also forgetting about what will happen when the Fed pivot, which is an inevitability. It's going to happen before a new all-time high, and as such you're going to see a massive crash in the market. Stock market will go down, the crypto market will go down. Now the question is, if you can get to a high place in the price chart before the Fed pivot, as in you can get to like 40k maybe, then of course you're going to be protected quite sizably from that crash and that move to the downside. It'll still be brutal for all those leverage-based players out there, but if you're like Chris and myself, spot buying Bitcoin down here at like $15,000, $16,000, $17,000, then you know you're not going to be in terribly too much of a bad position. If, however, things start to turn now, when we move down to $20,000 or $21,000, and then we have a start this move to the upside, then the Fed pivot, well, then you're really testing those lows again, right? And so it's important that we kind of reflect on the ideas that there's many different ways that this can go. No one really truly knows. But one of the things that we do know is the Fed will pivot. That is an inevitability. It has to happen. You cannot just continue to keep rates the way as they are. They can't stay as high as they are, and they cannot continue to rise at a rapid rate without causing more damage. So at some point in the near future, the Fed will pivot. And when the Fed pivot, the entire stock market and the crypto market will crash, and it will be pretty sizable. We've seen the history of this many times before, and we've seen pretty sizable moves to the downside. 50% is not uncommon. Okay, so we know that that's going to happen, and obviously we can hit the $38,000, right? We can come up here, the Fed could pivot, and we could come down to that $20,000 CME gap, and that's okay. That would be perfectly fine, a very healthy, natural correction. Yeah, sure, it would be really damaging for many of those retail investors who are going long all of these moves up here, because they do not appreciate that you do not move up in straight lines when you're in bearish times. And we are in bearish times because the very definition of a bearish market is essentially when the demand is not as strong as the supply, as in there's too much supply for the demand to soak up. That is currently where we sit right now. There isn't enough demand to soak up the supply. So what we actually look for is this. Although people want this move that we've recently been seeing to mimic this one over here, they are vastly different. In fact, we have about 40% less volume going through on the and off the exchanges during this moment in time, from the 1st of January through to where we are today, versus that of the 2019. They are not the same. Okay, they might look the same on a candlestick chart, but they are not the same at a fundamental level. And there's many different reasons for that. Okay, so when we think about this, we have the ability to push up a little bit higher. That would be great. We can obviously get these weekly close positions in really strong positions, but essentially there will be a Fed pivot, and the Fed pivot will see, in my opinion, a minimum of 50% reduction in the Bitcoin price. Okay, so we have to kind of consider these things. So looking at the weekly time frame of what my expectations are here, we are still going to look to climb up. I still think that we can tap into and probably get rejected from 38,984 by claiming that $35,000 CME gap. I think that is where our momentum is indicated to us, not only on the weekly time frame, but also the daily 8-hour and 4-hour. All of that is looking pretty strong. So we do still think there's pushes to the upside. So we have to go up before we can go down. But down is essentially where I think we're going to end up going. It is going to be a fantastic opportunity to continue to dollar cost average. Not so much into BTC. I mean, we did a lot of that already. But we can do more as price of Bitcoin comes to the downside. Essentially, it's going to be where the altcoins really heavily bleed out, and where the altcoins are going to see their new bear market lows, and essentially where you want to be dollar cost averaging into really strong, fundamentally sound altcoins, because those are the ones that are going to see significant profit over that of BTC. BTC has diminishing gains over time. It's not going to be that impressive. You'll be lucky if you can push, 2,000%. I mean, very lucky if you can push 2,000% gains on BTC, whereas 2,000% gains on an altcoin is very, very easy in comparison. You do have to make sure that you're on the right kind of altcoin. So knowing that you're going to see more percentage gains from your altcoins than you are from Bitcoin, Bitcoin's of course slightly safer. It doesn't have so many issues with regards to the SEC and things like that over in the US, but I do think there's a turning point now with everything that was going on with XRP and all that kind of good stuff. So for the most part, we're looking pretty strong, I think, at least on the short term. On the long term, we do have to see that correction to the downside. As we can see here, we have ourselves the higher highs and the higher lows, and a lot of people want to think of those things as bullish. I look at these things and think, that's bearish. And that's because when you see these things repeating themselves over and over and over again, high highs and high lows have a tendency to break down, and lower highs and lower lows have a tendency to break upwards. Okay, the kind of the opposite is true. Eventually, you kind of run out. Now, one of the things that Elliott wave theory tells us about structures like this is that they are bearish, and they are bearish because of one very simple fact. You are creating an overlapping structure. An overlapping structure means there is no definition to trend. It's almost a continuation pattern, slightly tilting up higher. This is bearish, all in all, because these are just depicting short-term moves with no trend, and meaning that this is just going to continue whatever trend kind of led into it at some point, which for the most part in this particular direction, considering we are looking at the higher highs and the higher lows, this unfortunately will mean that a breakdown from this area is inevitable. Okay, now essentially it probably means that we have to push up higher first before we can move on down. This continuation pattern doesn't look like it's finished yet, but essentially the move that started this is the downward move. We are in this kind of move to this kind of higher highs, this overlapping structure. We'll probably move up. As I said, I'm still targeting out that $35,000 CME before we break on down. But a breakdown is something that I think we are likely to see. Okay, that's your shorter term view. And again, you can take a look at this in many different ways. You could take a look at it from a smart money concepts point of view, where you can see the fair value gaps. You can see that we're overbought on our 1 hour time frame here as well, so we're not looking to kind of push this up massively in the early hours of Sunday. Maybe later on today if we can. Still target out that 29,612 to 29,795. That hasn't changed. So yeah, for the most part, we're still looking at moving down by the looks of it here on the short term until we get that momentum shifting back to the upside. So yeah, I think that's going to kind of wrap it up there today, guys. If you found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.